if you focus on what you're doing and the value that you're bringing to clients and your people, financial aspect of it does take care of itself.
My guest today is longtime friend, founder and CEO and chairman of Risk Strategies, Mike Christian. How are you today, my friend?
Great, Al. How you doing? Thanks for having me on your show.
So I thought we'd kick off, let the folks know for my 37-year career. I know Mike for you about 36 and a half, Mike, right from the beginning when I was starting in my late 20s. Got to know you back at Jardine in New York. And obviously we were trying to get you some producers and things like that, always with the theme that trying to help people grow and grow profitably. Started out with the producers, then teams of people, then acquisitions, et cetera. So you went all the way back to the days where I was trying to get you producers when you were running Jardine, New York. Great conversations we had. And I tell everybody, Mike Christian is not only probably one of the best insurance guys in the country, but one of the best people that I've ever met in my career as a person. And I really mean that, Mike. I really have been looking forward to this conversation. So it goes back that far, Mike. And I remember how it evolved from Jardine. Then all of a sudden, Jardine was purchased by A&A. You were at A&A for a while, and they sent you up to Boston. You being a California, LA guy, as we always talk about the Dodgers and all our baseball connections. From New York to Boston, and I remember you told me you were hanging your second picture on your wall in your new office, and A&A was acquired by Aon, and that's when you started to think about what am I going to do next, and you didn't really want to be bought again. And I remember the conversation, and I remember it evolved to me maybe helping you secure another position somewhere else. But, you made the move, and that was shortly thereafter the birth of Risk Strategies in 1997. And what a history that's been right up to that point, and what a history what you've done and built in Risk Strategies up until today. So congratulations on all of that. We got a lot to talk about today, considering what just happened a week ago with Risk Strategies and with the acquisition by Brown & Brown. So like I said, I've been very much looking forward to this conversation.
Likewise, Al. Thanks for having me on. You told most of the story about why I started Risk Strategies Company, but just for your audience, I'll tell them about how my first impression of you, because I think you're right. You were starting out as a recruiter, and I think I caught you right at the beginning of your career. You called me right at the beginning of your career. I was impressed that you were very rough around the edges, but I was impressed with your aggressiveness and your assertiveness and your drive to keep moving forward. And I always thought that guy's going to be probably pretty successful at some point in time. And so here we are, fast forward 30 plus years or whatever it is. And it's great to see that you built such a successful business. I'm really proud of you. And I think you did a great job. So I'm happy and honored to be on your podcast here today.
Well, listen, like I said, you were top on my list, and thank you for those kind words. I'm still rough around the edges, Mike. That's never changed, but I will never change. I will never change that. And as I tell my wife, I'm too old to change now. Okay. You were one of the guys that really helped me get off the ground. And, I remember when you started Risk Strategies and we were kicking around just trying to get you producers. And I know a lot of the initial deals that you did were teams of people, and you had a very, very good following of people from your Jardine and A&A days that were able to help you start up, I believe, startups in both New York, I think was probably one of the first ones. You had a foundation of people there from your past, and then Chicago, you started de novo there. So you really started de novo until you got some capital from Berkeley, and then that started a little bit of the acquisition train. But the big deal that really, I think, set the mark for Risk Strategies that I was proud to be able to do with you was Deutsche Stern. And I think that really put you on the map as a firm that was serious about M&A. And I remember to the day where back then, where multiples were nowhere near where they are now. And the multiple you had to pay on that, I remember you pausing and swallowing hard on the other side of the phone. I said, Mike, do this. But that was an exclusive deal for you, where Jolly Stern, who I introduced you to, and a very good friend and client of mine, about a year and a half before, one day called me up and said, okay, call Mike. let's do this. We never went to the market or anything. And you successfully made that transaction, which was a marquee transaction in the space at the time. And here we go. And look what you did since.
I'm going to go back just a little bit to talk about the beginning of Risk Strategies Company, because I think it's important in terms of the foundation that we built for future success. We weren't a company. There's many private equity-backed platforms now, and most of them, frankly, went out, raised some private equity money, and started making acquisitions. We were the exact opposite of that. We didn't raise capital, outside capital, for a good 12 to 15 years after we had started the company. And I think the key thing about the organization, and I still talk about it to this day, is that we started as a consulting firm. We were focused on upper middle market type clients, alternative risk. And it really was reflective of the things that I had done in my career. Obviously, I was just the only guy there. And I think that and it wasn't intentional. It was practical at the time, because that was what the value that we could bring to clients. And we started hiring people. We had an analytical approach. But I think that foundation that we built to come at it with larger clients from not selling insurance, but from a consultative perspective, was really infused in our culture. And, the words that are used today about Risk Strategies Company, although it's part of Brown & Brown now, are still the same. So I think that was really the edge that we had from the beginning, although not necessarily thought out as a strategic approach. That was why we ended up at the spot that we were at. And we're able to do the acquisitions you were talking about. And you're totally right. DeWitt Stern was the defining acquisition. I would still say it was the absolute turning point for us as we started to grow the firm. And we did have some outside capital at that time. Colbert and Company was our partner. And that was what really the beginning of the growth phase that we had. And that was 10 years ago now.
And Mike, I think not only, and I would have brought up, but I wanted you obviously to tell your story, and I certainly don't want to steal your thunder here. I want the people to hear from you, because there's a lot to talk about. But yes, you originally started as consulting. You weren't looking to be a retailer, okay? But when you became a retailer, I guess you bought a small shop up in Massachusetts where you were. You stayed with that consultative approach, large account, risk management, alternative risk, captive type mentality. But also, I think the big thing that you did beyond everybody else was you really focused on creating the verticals. The riches are in the niches, as they say. And you were really focused, even though you were driven by commercial. That was your thing. There was no EB. There was no personal lines. There was none of that when you started. It was large account commercial and focused on certain disciplines. And I think that was ingenious.
Yeah. And I think that was really the beginning of the evolution into being totally a specialty broker that we ultimately became. And I'll give some credit to Kohlberg, our partner at the time, had us go through a little bit of a strategic process. And out of that came the fact that we were a specialty broker, but it was a fairly narrow niche. It was upper middle market clients, and it was alternative risk, mostly captives, self-insurance and things like that. And growing out of that specialty, we started to look at developing other specialties that might have been private equity, healthcare, transportation, the whole array of specialties that Risk Strategies Company grew into having. But the seeds of that were planted, with our first private equity partner, and with really our consultative approach, because the consultative approach allowed us to bring specialists on who weren't just selling insurance and weren't generalists necessarily, although we do have a lot of generalists. But I think that was what allowed us to grow in the way that we grew. And it infused our M&A strategy also. We only acquired, as you know, specialty brokers. Go back to DeWitt Stern. They were a shining example of a specialty broker with high net worth personal lines and entertainment and Broadway shows. That really was the thing that boosted us into specialty.
Well, the interesting thing is, Mike, is now your peer group, or the ones that kind of followed you, and I will say this: Risk Strategies is the company that everybody that was private equity backed, strives to be. You set the bar in a lot of ways, because now the way these private equity backed brokers work is they're all looking for verticals. They're all looking for expertise. And the reason being is it's stuff that was usually outsourced. And now you can bring in as the expert, and it creates the alignment because the way these deals are structured with a small percentage of the closing payment, and some use it in the earnout, in the equity of the overall, it's ingenious that you can align with the equity, and that this guy's the surety guy, this guy's the marine guy, this guy's the construction guy, and really it's kind of followed your methodology because now they're all doing it, and it's not just insurance brokerage. Now the wealth management's in there, right? EB was a natural, right? That was a absolute natural. You have wealth management, right? Life insurance, right? Just go down the line. High net worth. I mean, go right down the line, and we've sold. And into your firm, even actuarial firms, auditing firms, right? And, other firms, tax advisory firms, anything you were outsourcing now in that specialty became in. So it was really bringing all the financial services together. But I think you had a big impact on that, on the way you structured risk strategies.
Well, thank you. Yeah, I think I think it evolved. It was more evolutionary than revolutionary at the time. And, once you start looking at once we had the platform of being consultative, it was easy to build off of that by bringing experts into the firm that were specialized in a particular area and were consultative. Generally, an expert is consultative when you deal with clients. So that really was the thing that distinguished us. Although I would say it wasn't like a brainstorm that we had 25 years ago. Let's be a specialist. It really did evolve over time. One other thing that you hit on that I think was important to our growth is the equity aspect of it. In the early years, I didn't really have any money, and we didn't have any outside investors, but we did have equity in the firm that we could give to people that joined us. And while that again was not revolutionary, and that many other firms gave stock in their firms to producers, key people, and account executives that joined the firm, I think that also became a key part of our culture is equity ownership in the firm. Well over 1,000 shareholders in the firm, and certainly when we made acquisitions, there was always an important component of equity in the acquisitions. And thankfully over time it worked out pretty well. But I think that was another key part of our success was really focusing on that and not just doing it occasionally. We did it all the time. So,
well, I think when you look back at just a few things we mentioned here, you really set the bar on a lot of this. I give credit to a lot of different people, and there was private equity in this business. First one we were ever involved in was 2006 with Tannenbaum, Barber, and Tesco. I mean, when no one was really doing it. And Jim Quinn at Olympus, if you remember Jim, right? I think I introduced you to Jim. Jim's now the CFO, Mike, of AmeriLife. Okay, all right. He evolved into many different things, but I think you set the bar, Mike, on a lot of different things, and you really built the company, like I said, that everybody aspired to be. What do you want to be when you grow up? A lot of these ones now would point to risk strategies. And I always felt you were top of the table of the privately held firms, just in the high quality of the people you had, the accounts you had, and obviously creating these verticals. And I was there for all of it. I saw it all. I remember I and John Baglica, we're all both very fond and good friends with John. John was a very, very important part of your M&A strategy as, the CFO and everything else up until you got big enough where you had to pick one lane, and he chose the M&A, and he's done it. He was a great John. John did a great job. John was fantastic. He was as good as any presenter out there, and we did so much together. And then it kind of morphed into the benefits, right? Because for a long time you weren't doing benefits, and then you started doing benefits, and that exploded, right? Talk about that a little bit. Some of the evolution of some of the things you did, from the benefits to the wholesale it was fascinating because it always is like things you were setting the bar on that it seems like others followed.
Well, I'm going to give an answer that probably is the answer that anybody else would give about expanding into other areas. I think it was because we were consultative we got to know our clients very well. And at the outset, again, it was in a narrow area, casualty oriented generally. But as clients, as we became better problem solvers and clients appreciating our approach, they started asking us to do other things. Can you place my house? Can you can you look at the health insurance for our employees? What about life insurance? All those types of things. And it just struck us that this would be an opportunity for continued growth off already meaningful relationship with a client. And in those days, our clients were mostly upper middle market type clients, so they were larger clients. And that was really the impetus for us to start to expand in other areas. And it wasn't all done through acquisition, and it wasn't all done, in a short period of time. Again, that was the same evolutionary process that we've had for a long time. Remember, I started the firm 28 years ago, so we've been around for a while. And I think particularly with the benefits, we brought a key person on, and then to this day, John Greenbaum, he still runs our benefits practice, and that was something that evolved over time to where it's probably 25 to 30% of the overall business from a revenue. So and a lot of it was off relationships that we had on the property and casualty or in the specialty area. A lot of it was just built by itself, but I think that ability, I hesitate to use the phrase cross-sell because it's been an overused cliche phrase, but there was cross-sell opportunities, frankly, and we were able to do that. And I think, but mostly it just happened naturally out of a strong relationship that we had with our clients. And I'll just add, you touched on wholesale. I'm a retailer. I like working directly with clients. Business was a retail operation. The wholesaling part of it came part due to a firm that you presented to us and that we acquired down in Florida from a firm that had not only retail clients, but also had an element of alternative distribution to other brokers because they were specialists in marine business or their special real estate. And that was really the beginning of what ended up being an alternative distribution program, wholesale business, whatever you want to call it. And I think we grew that. We got to a spot where there was a meaningful amount of revenue there. Again, those of us that were running the company were really more retailers. We said, we got to do something with this business. Either we sell it off or manage it proactively instead of just letting it bump along. And so we brought Power in from AIG, and he took it over, and that evolved into 180, which was really more of it was a specialty business that really was a little reflective and was parallel to our retail business. So it had specialty niches, some the same, some different, but it mirrored that specialty approach that we took. And now that's one of the largest wholesalers in the country, and Matt's done an amazing job with that. But again, it evolved. It didn't happen overnight, and it wasn't strategic until just maybe 7 or 8 years ago.
Well, it was a short period of time. You built that kind of de novo. Then you started doing acquisitions on the 180 side, and
frankly, it helped us with the acquisitions, especially through COVID, right before COVID and through COVID, because a lot of the other private equity backed platforms did not have a wholesale niche or an alternative business or alternative distribution niche. They all do now. Everybody's looking at that type of business, but in those days it wasn't. And so it really allowed us to be quite successful in a period of time by being able to acquire those opportunities.
A lot of the things that we talked about, wholesale, wealth management, now your peer group, if you don't have them, you're not competitive. There was 10 years ago, Mike, even if you were a retailer and you tried to do wholesale, it was taboo. It was like, you can't do that. No one could do it. There'll be a conflict, all this other stuff. As we found out, that was never true because, it's all how you presented it and, so on and so forth. But I think the unique thing about Risk Strategies, I will say, Mike, that really differentiated you from your peer group, okay, not just the verticals that you built in the strategy, was the ability to perform from the largest accounts. You could compete with your background with Marsh, Aon, Willis on the big stuff right down to the upper middle market, through the middle market. Then it went down to, the high net worth, which was a great strategy. Obviously, you brought the benefits in and all that good stuff. And then through acquisition, even in the small business stuff. So you covered the gamut from soup to nuts, where a lot of your competitors, cover the gamut, but a lot of it is middle market and down. You had the ability to play in the upper middle market and the large account arena, where I think that really differentiated you.
Yeah, I think that's how we started. So that was really at the heart and the roots of the organization. Over time, we became less of a player in larger accounts and more diversified with the various niches and the specialty areas. But I think still we were comfortable, at least in the core essence of the company, with larger accounts and being proficient at that and being an alternative to the big global brokers.
Well, you for the larger acquisition targets that did larger accounts, you became a very desirable outlet, because a lot of your peer group didn't have the ability or didn't have the resources to really compete on the large accounts. So when we had something of scale, of size, okay, we knew that if we had to, most people would want to say, well, we got to talk to Gallagher and Brown and Marsh Agency and so on and so on. But you were a great alternative to that. And the thing I think you had that they didn't, and no disrespect to any of the publics and not suggesting that, was you had still the entrepreneurial spirit. You were built as a private, you still maintain that entrepreneurial spirit, which is really what changed your industry, was what this influx of private equity capital and this alignment of equity. We talk about it on every podcast. You're my 11th one that I've done, but you really had the ability to attract at all levels. Once you started out with the big accounts, which most people don't, and that's why, but you could do and look at anything that made sense. I do think you guys were super selective in a good way. At one point, I don't know if it stood up till now, at whatever you are, $2 billion of revenue or so in that area. I know we did, Sica Fletcher, about half of your deals, probably in the last 15 years. John V used to give me the stats. But, we knew the stuff that you would play on. And I think the one thing that really resonated more and everybody talks about is the people. We knew the kind of people and the kind of culture that would attract well and play well in your environment. And it wasn't for anybody, and I'm not saying that negatively, I'm saying it positively. You attracted a lot of strong talent.
Yeah, I think that you touch on a great thing, and of course, anybody would say their culture is what is the most important thing, and I think that's absolutely true. I think the thing that was a differentiator in our culture, and we often use the word collaborative, and collaborative is a cliched word now, unfortunately, because everybody says they're collaborative, and the word's used and bandied around quite a bit. But in the early years, we had to be collaborative. We were, as you pointed out, we were working on larger accounts, more sophisticated accounts. We were competing against the big brokers, all the global brokers. And if we didn't have the 10, 15, 20, 50, 100 people in the firm working closely together and meaningfully on those larger accounts, we wouldn't have been successful. We couldn't have competed against the larger brokers. So we truly were collaborative, not so much because it was a lofty aspiration, but more because it was a necessity. We had to be collaborative to be successful. And I think that is still in the culture to this day. I think as you get bigger, it's much harder to manage that, and it's much harder to manage a culture. You really have to actively manage culture. But I think that was a key element to our success.
But I know that you kind of always used to tell me you lined up what the most important pieces were. I know it was probably, I don't know if your people came first or your client came first. You always focused on the client. You focused on your people before anything else, before acquisitions, before anything. And I think that, Mike, that's really, really stemmed down from where you started. And it was a great strategy. And it was your personality. Risk Strategies always had your personality, which was the finest and the best. There's not a person that I know that I've come across in 37 years that doesn't feel the same way that I feel about you as a person. first class all the way, gentlemen, and you just kind of brought that, culture and energy and attitude into risk strategies. And that's why you built the best in class business. You should feel very proud of that, Mike.
Well, thank you. I appreciate all those accolades, but I think I have to. I certainly didn't do it by myself, and I think you go back to the people, and that's it. What you said is exactly right. It's the clients, the people. How do they relate to each other? I think if you have the best people, you're gonna attract good clients, and you're gonna keep your clients. And I think that was always our focus. Maybe not always stated that way, because everybody says, "Well, I'm focused on my clients," and of course we're focused on our clients. But I think we also were very focused on our people in a variety of different ways. The collaboration made people feel like they were part of something and they were working together to accomplish something and be successful. I think the equity aspect of it, so many key people own stock in the company, that brings people together. So it's not just one thing. There's no magic bullet for that. But I think, and you have to work hard on the culture, and you have to bring the right people in, bring the wrong people in. And believe me, we made mistakes for sure. But you bring the right people in and get them working together and have incentives for working together, the stock being one of them. I think that was sort of the magic formula. Although, again, we didn't set out to do it exactly that way. It also evolved as we built the company.
Always, Mike, as long as I know you, all right, you were always client focused because you had a firm that was being built into the hundreds of millions of dollars of revenue and still were managing your own book of business. Whether it was $1 million, $2 million, $3 million, something in that arena, you always took care of your customers. You never gave that up. And the one thing you never did, Mike, is forgot where you came from. And that's a big thing. That's my biggest thing. See a lot of people that, they build these companies and they forget what got them there. They forget the people that got them there. And I never forget that. That's why this is such an important discussion for me, because you were clearly not only a great friend, a great client, and everything above, but you were, somewhat of a mentor to me. You're one of the guys that I'll never forget and always totally give credit to. Mike, I remember the early days when I, and John would be running around, whether it was St. Louis or another city, and we were just getting going and looking at a bunch of different things, and we had a blast. It was some of the best times of my life when we were all running around and traveling, but there were good times to have.
Yeah, for sure. And I always tell people that, people say, isn't it amazing how big the company is? And I always go back and say, it was those early days, not the very first days, but those sort of middle days, 5 to 10 to 12, 15 years into the company's, arc of growth, that were the best days. I loved it, which I'm not disparaging the more recent ones of growth, but I think just being able to build and be successful and competing against the big brokers, not only with clients, but also with acquisitions. And I wasn't really skilled at making acquisitions. I made one acquisition. You alluded to that at the beginning of the interview. Just to get in the game. So we had a system and we had some people and maybe something that carriers would recognize so that we could get some appointments. That was really important for us as we were evolving into being a broker from a consultant. But as far as acquisitions, I stumbled through the first few. I learned a lot from you. I think in the first 5 to 10 years of building the business, you're probably responsible for at least half of them. And DeWitt Stern, you mentioned it before, that was a defining acquisition for us, a turning point when people put us on the map. So I think I appreciate all the work that you did, because we really ended up, along with John Bagelkid too, obviously, ended up being a great team and brought a lot of fine people and firms into Risk Strategies during that time.
You're more than welcome. I had a blast doing it and always tried to help any way I could. Even, a couple times trying to bring in the next round of capital, which I always say to myself, all these investments we've made, the company that I always felt so close to and so fond of is the one that I never got a chance to invest in. And that was no one's fault because I never brought the money in. I tried a few times. And obviously back then when I was trying to do that, maybe I wasn't worthy, or we weren't worthy yet of being the sell side advisor. We clearly are now in many, many of these things. It's just been a great run, Mike. I mean, it's a great company you built. I was glad to be part of it all, and I give you so much credit for how you did it, the way you did it, and how it ended up to a point where now it's changed its course, and maybe that's a good segue into the marketplace. Because I'm sure a lot of people are going to want to hear this last round of your development into trying to figure out your next move. And I know it was a long haul. Okay, over about an 18-month period, and you got it up to about $2 billion. It's kind of a defining moment because a lot of what's going on in the market is stemming from where Risk Strategies ended up, and where Assured ended up, and these were firms that were your peer group, the multi-billion-dollar firms. And look, I know you, as I said, for 36 and a half of my 37 years, and I know you well enough in the conversations we had that there's no way that you ever designed this company. You built it to last, but there's no way if you had to blueprint it, and like you said to me yesterday, a year ago, that your next move would be a sale to a public company. If you told me that was it, I wouldn't believe you, because I know what you really set out to do. And I'm not saying anything negative about Brown and Brown. Great company, know them very, very well, super successful. But I'd love for you to speak to what you saw in the market, what really drove you to this, or the things that inhibited you from doing, I think, what you guys wanted to do, which I think was to stay private at least one more round until you made prepared to go public down the road. But I'd love to hear your take on that.
Yeah, well, thanks for that opportunity. I would say, and I should preface this with the fact that for all the listeners out there and the viewers, I stepped out of the CEO role at Risk Strategies probably 4 or 5 years ago, and moved into the chairman role. So I was less involved in the day-to-day aspiration or operations of the company, and certainly on the board, and certainly involved with strategy and mentoring and all those types of things. But I think the more recent aspects of the company were under the leadership of John Mina, and certainly our longtime private equity partner, Kelso Company. So I think if I look back at the beginning of the firm, I just wanted an alternative. I'd been acquired, as I mentioned at the beginning of the interview. I'd been acquired a few times. It was a consolidating time. Most of the consolidators were the big public brokers, very similar to today. The landscape was similar from an M&A market standpoint. The edge went to the public firms because they have a cheaper cost of capital, which they have today. And so I tried to start a firm that was it was a boutique firm. It was small by its size and by its nature, and by our aspiration to have a boutique firm focused on bringing great people in, and focused on our client, everything we've already talked about. So as the firm grew, and especially really the accelerated growth is over the last 4 or 5 years under the leadership of John Mina, the current CEO of Risk Strategies, or up till last week he's CEO. And I think that primarily came through M&A, and it was the momentum that was built in the early years. But I think the team did an amazing job growing the company and sticking to the strategy of being a specialty organization. We remained a specialty organization through all of that. So if you go back to the question you asked, Al, did I ever envision building the company and selling to a big public broker? Nope. That would have been the last thing I would have thought about. I was really going day to day, week to week, year to year in terms of building the company, guided more by bringing the best people in and doing the best we could for our clients, and not necessarily worrying about the financial side of it. Of course, you always have to worry about the financial side of it, but if you focus on what you're doing and the value that you're bringing to clients and your people, I think the financial aspect of it does take care of itself. And that's not a naive statement, just saying, oh, the money will come no matter if you're doing the right thing. You still have to manage it, obviously. But I think we did become successful both in terms of the value that we brought to clients, to our staff, to the carrier partners, but also financially successful. And there were different events. We were private equity backed, obviously, and if you have a private equity partner, they're going to want to provide some liquidity to their limited partners. We have employee shareholders that want to see a little bit of liquidity now and again. And so we did have some events, and over the last 4 or 5 years, it was, coming time to have another event. Al, you mentioned about the market, and I'll be interested to hear your comments on it also. The M&A market, very competitive. There's several private equity-backed platforms like Risk Strategies, many of them newer platforms over the last 4 or 5 years, some that have been around almost as long as we've been around. But there's a lot of competition for acquisitions, drives the pricing up, or has driven the pricing up over this last cycle. The increase in interest rates had a pretty big impact on private equity, venture capital. I think it changed some of the financial models. So it led to the point where large platforms like us weren't necessarily as appealing to other private equity firms. So that role that we were on, from going from, you mentioned Berkeley and Kohlberg, recaps over the last few years with Kelso, that wasn't going to happen this time around, because there's just not a market for the larger brokers, private equity-backed brokers. So, and it really opened the door to considering other options for the Strategies company. And that's really how we got to the point that you were talking about, Al. And I don't know if you want to ask some more specific questions about it, but I'm happy to dig in deeper.
You want my take on the market, and it's very similar to what I've been saying in all these podcasts. I think, Mike, the thing that I want to know from you, and you, like you said, you've been disengaged as the CEO, but you're a smart guy. You haven't been disengaged in what's going on with Risk Strategies. It's your baby. You built it. You started it. Yes, John Mina came in, did an excellent job, but he stepped into a pretty damn good company to begin with. I mean, so he did a great job facilitating it. But, I go back to the early days. I think if I had to forecast it, and like I said, this is just me looking from the outside, and a guy who studies the market every day and always is looking, especially for the investments that we've made and the ones that we've made, the deals that we've cut to be able to do the recaps when they come around, is that, it just felt like to me that nobody really expected what they saw they were going to get. I think probably when you went into the market, that I would say the same thing about myself. Maybe you didn't expect that there'd be some kind of reset with the larger private investors, that, maybe you just needed to get one to latch on with Kelso, or some others, as Hub done and USI, have multiple investors to stay private. They were public companies at one time. But it just feels like to me that, a great company like Risk Strategies, the best of the best, stepped into it and found out, holy mackerel, it's not what we expected to happen, right? So now you had to kind of back up the truck, figure it out again. You dipped your toe in the water, then you went back out a little full blown. There was a lot of rumors, around what was going to happen with Risk Strategies, et cetera, et cetera. And then basically you must have got to the point where obviously you weren't prepared to go public yourself, because that takes a couple of years to make sure you're fully integrated. And none of you guys will ever be fully integrated, no matter what anybody says. Okay, it's just too hard. I'm not sure all the publics are fully integrated at this point. And had that, consistent organic growth, and everything was humming, okay, that you said, okay, we now are at a point where we got to give liquidity to our shareholders. And you're so right. That equity alignment, Mike, it's all about liquidity. It's all about the recap, right? Everyone's working for the same event. Those employee shareholders, yourself, the private equity, your leaders, everybody's got a piece of the pie, rowing the same boat. They're looking for the outcome. Like I said, the equity is only as good as the liquidity. So it seems like to me, what it feels like is both what happened with you and Assured is that you guys came out thinking, hey, we'll get somebody else that'll, give us a really good value, and found out that wasn't there, and maybe there wasn't, that many takers. And, I'm not sure anybody could have forecast that. And here you were, and what do you do? And now what are your alternatives? And that's when you had to go the route of potentially selling to a public. And that's how I see it. Maybe I'm dead wrong. Okay. But, I do think that the ones that I've gotten involved in and that we've gotten involved in, I think there's a magic number now, an EBITDA size, that if you go over that hurdle, you're going to be looked at like Risk Strategies was. If you stay under it, there's still a chance to get another sponsor because you're small enough to have another sponsor or a co-sponsor to continue to build. But ultimately, I think the game has changed since you and Assured have gone out to the market on what these other peer groups of yours that are going to eventually get to your size should expect. So I think the question to you, and maybe you could give me an answer, the best answer you can, if you think I'm right. Well, I don't want to be right or wrong. I just want your opinion. But what advice would you give some of the others that are now getting into the 700 millions, where Risk Strategy what would you give them the advice they'd give their, maybe over that $300 million mark, how to prepare for the optionality, which is the new word everyone's using?
Optionality. I haven't heard that.
That's all you well, maybe because you've been out of the loop a little.
Yeah, you want optionality.
That's everybody's saying optionality now. That's the big new word.
Yeah, well, I want that in all aspects of my life. But
right.
I think if you think about, well, I'll go back to Risk Strategies for a second. I think I think the leadership and all of us, and I had a little bit of input into not as much as I might have as a CEO, but you still got to go back to the clients and the people and the shareholders, right? You still have to. You're trying to balance out what's best for three groups of constituents and people that are interested in what happens with the organization. And I think trying to find that best combination of solutions or one solution that can satisfy that combination of stakeholders in the company, that's a hard thing to do, and it's harder when you have fewer options. So in this market, you said we have fewer options. There's not the the competitive private equity environment that there was 3-4 years ago. And so what do you do with the company? And really, it's a great company. It's still got a lot of great people. It still has an amazing amount of value, and the value that we bring to clients, and the number of clients, the types of clients that we have, still pretty amazing. So what's the best option for that? Knowing that there's some pressures for liquidity to LPs, pressures from shareholders, pressures to for succession planning, all of those things. It all comes together. And you're right. You can't just wave a magic wand and say, okay, we're going to go public, we're going to do an IPO. That requires a lot of time. Time is also an important component in this. So having analyzed all those types of things and been in a process, the ultimate decision was to go with Brown and Brown, and I think it's a good decision for all of the stakeholders in the company. Now, I know Powell Brown pretty well. I think one great thing about the company is their focus on their culture. That's a really important aspect to them, and I think they actively manage the culture. And they're a bigger company, much bigger than Risk Strategies company was, and now together it's a really big company. So I think if you think about the culture and you think about having the best employees, and think about the fact that the best employees are what's the most important asset for your clients, and then obviously the shareholders are going to benefit from the sale. I think it was the path that was appropriate for considering what the market is. I think most people see it that way too at this point. And so advice to others, I think, be guided by what's best for your clients and your team and your shareholders. I think that's how you have to look at it, and weigh those three areas of stakeholders and see what is the best option in the context of what the market is today. You still have the option of hanging on and doing an IPO at a point in time, hanging on and waiting for the market to change. Inevitably, it will. Private equity will come back in and be more meaningful at that point in time. Hanging on and seeing if there's a merger opportunity. So there's always options. It's just the timing of the options, and when you decide to to pursue one of those particular options. So I think Risk Strategies was at that point in its evolution as an organization. And I think most people are pretty excited about what the future is going to bring for them, being part of Brown & Brown.
No, and I agree 100%. It was the alternative and the best decision that you could make from where you were. And I think the learning lesson for everyone, including myself, who's heavily involved in these transactions, is that, it's a constant evolution. There's no truth to private equity's not interested in this space anymore, because I get 12 new calls a week. Okay. So it's just a matter of really that, I'd say the fortunate thing is that people now can, that are coming up behind Risk Strategies, they'll see it and know what to do, maybe a little bit better. Like you said, the unfortunate thing is, that it came to a point where I don't think anybody was really ready for the outcome. That's what I see. I mean, I don't think anybody expected going out there. And listen, I'm a student of the space. I want to be 5 steps ahead of everybody. And I think I've proved that in a lot of ways and how this company's evolved. And, obviously I got a much smaller company than you built, Mike, but it's super successful. And I got great people, just like you do, that helped me get to where we are. And I'm very proud of it. But I do think my biggest job is always studying the market and understanding it. And, the mistake that I won't make is I'll be out in front of the market before I take anything to the market. I'll hopefully know that if I go to the market with something, that I'm not going to be blindsided in any way, that there might be a reset going on with how people are going to value things and so on and so forth. And I know that sounds kind of like a Monday morning quarterback, but it's not. It's kind of how I go about my business and try to stay steps ahead. And I think I've been very vocal in saying this on other podcasts, and I've had a couple of private equity guys on, Kevin Angelis and Brent Stone. And I think the big thing is a lot of the way these processes are run, I don't think are very efficient. I think that, they just go out to the world and, throw a bunch of stuff out there to see. I think that's going to get them the better value, where I think it devalues it. I think it devalues the firm. I think it's being much more strategic to go out and identify the hot players before you do anything and kind of pre-sell the deal. Okay. And that's what I've been able to do. We at Sica Fletcher, we're not the big name bankers with, everywhere. We're certainly a bigger name than a lot of people think, because we're at the top of the leaderboards always, right? For, as long as I've been reporting these things. And I give that credit to my partner, Mike Fletcher, who was the one that said we should start doing it when he and I joined forces. But I think that has a lot to do with it. And I think it has a lot to do with having trust in what you're doing and evaluating the market first before you go out to see who the hot players are and keep it very limited. Most of all the deals that we've done have been exclusives. Here's the price. Here's the exclusivity. They all need to spend the money, and I think what happened is there's a little bit of reset. A lot has to do with the interest rates, like you said. I also think people are trying to reset the values, because still, Mike, some of the values that were thrown around probably for Risk Strategies and Assured, we're still getting for firms that have 6 million of EBITDA, which is crazy in its own right. But that being said, I think you asked my opinion. I think it's being a little bit more of a student of what's going on out there before you actually throw yourself out there. And I think that's the one thing that I'm going to learn from this process, because I think Risk Strategies is the best company out there, Mike. It's been said. I've said it over and over to my clients, to the sellers, so on and so forth. And I don't think, like you said, you ever would have dreamed that the outcome that it had. But right now, yes, it's the best outcome.
Yeah, for sure. And I think you need, and for I think our people, and for the team at Brown & Brown, I think it's put two great companies together, and you got an even greater company. And who knows what the future looks like. Nothing lasts forever. Everything always changes, right? There's not very few things that you set in motion stay exactly the same. And I think that's true for Risk Strategies Company. It was a wonderful ride. I think the team is going to contribute a huge amount to to the continued growth of Brown and Brown. And I think that's, and the clients will benefit from that. Certainly the shareholders. So I don't see a real downside there. Should we? I think that, a founder is always going to have a different view. And, from a personal standpoint, would I have envisioned something different? Yeah, probably. I'd be lying if I didn't say that. But I think that doesn't diminish the fact that where Risk Strategies company is now isn't a great thing for the company and for Brown. So
Brown and Brown is a terrific company. I'm very fond of them. We've done some really good deals with them, and it'll be a great combination. Certainly, be definitely, in my opinion, the best deal that Brown and Brown will ever do. They may beg to differ, but I told Scott Penny when this was all going on, I'm very fond of Scott and the Browns. Hyatt, Powell, great people, built a phenomenal company. That this is the best asset out there. The fact that they're going to get a chance to partner with it is a big coup for them. And I think, there'll be nothing but positive that'll come out of it. I'm not even questioning that. But, being a guy that's playing ball every day in this game still, I'm kind of looking for the next move, because there'll be several of the people that, I'm involved with, that we invested in, that we brought the capital in, and will be taken out the next time, that we learn from these things and we know what to do and what not to do. And that's what I'm saying, Mike. But listen, I got the utmost respect for this transaction. I got the utmost respect for Brown. I got the utmost respect for Risk. Look, I've been through many cycles, okay? And I fought through them all. So this is just another thing, and we're still going real strong, and I'm sure Risk will continue on, and you and I will be great friends forever. And I can't thank you enough from my perspective, unless there's something else that, you'd like to cover today. This was a great thing for me, and I really appreciate your time today.
Well, thank you for having me. I was honored to be on your show. You're doing a great job with this, and it's been, as you've said many times, we've had a great partnership together, and I really appreciate that, value that, and we'll still be friends. So
always.
Thanks for me.
I'm having a blast doing it. You just added to it.
All opinions expressed by the hosts and guests are their own and are not necessarily those of Sica Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sica Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sica Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others. For more information about your unique situation, please contact Sica Fletcher or visit us at www.sicafletcher.com.